Hey guys, wanted to shoot you this quick video on using geometry to trade lower time frame charts. You can use these on any time frame. They're going to be more effective on lower time frames when looking for swing trades or scalps. So I have Tesla here pulled up. I have the Tesla 5-minute. And the first geometric pattern you'll notice I've drawn is a triangle. And this triangle serves to act as support and resistance in a way that's different than I think a lot of traders or people who chart for themselves will view support and resistance. Generally, support and resistance is identified as a firm, stable, horizontal line. Let's say here would be the resistance, and let's say somebody would draw here as the support. And that's right for the wrong reasons, in the sense that price doesn't have to abide in this linear setup. Price moves in channels. So think of price as moving directionally, either diagonally up or down. And we have this decision tree when it comes to these actual candles being printed. So you have a decision tree here. We have a lower low than the previous bar. Now the new decision to be made by the market is, will there be a higher high or a lower low? Lower low. This is actually inside, lower low. So we have this decision tree, and for that reason, you can't really abide by firm static lines. So that's why I've drawn this broadening formation. This will serve to identify the upper bounds and the lower bounds of the range that we're trading in. And the range serves as a range of outcomes, right? Because we can't look at a trade with 100% certainty ever, because a market is purely efficient, and it's a relationship between buyers and sellers, and we can't speculate at that, and we can't certainly make 100% accurate predictions. So we need to think in terms of range of outcomes of where price could possibly go to. Here's the current range, with this upper bound being right around the $1,000 mark and this lower bound being right about the $970 mark. Now, this concept is that price will always look to test the upper bound and it'll always look to test the lower bound. So think of price as making higher highs continually and lower lows continually. Price is always expanding regardless of time frame, and you can draw these triangles actually anywhere. Now, the next piece of geometry I want to set up for you is when talking about this range. So let's take the lower bound and where we connected our lower lows. All I'm doing here to set up these triangles is I'm connecting relevant lower lows. Operative word there being relevant, okay? So you'll notice this is actually the new low on the day, and this is the new high out of this kind of bloody range where I think there was some news about Elon buying Twitter here, and that's why we kind of saw this blood in the streets, okay? So I would consider this a relevant higher high and this a relevant lower low. So I'm just going to connect from the meat of this. This is a very strong bullish candle closing on its high, and we kind of saw this, degeneration down, but very mild, right? Like we're certainly in a trading range here. So anyways, let me draw this rectangle for you. And I'm just going to connect this relevant lower low with this relevant higher high. Okay, now this will serve to identify for us, and I can expand this outwards. This will serve to identify, where is price going to potentially break out? Because we don't want to trade in this trading range necessarily. You could, if you're scalping, like you could look for the scalp short here, you could look for the scalp long here potentially. But this is not a scalping video. This is a video, on geometry, and we'll do a scalping video later. If you guys are interested in seeing that, I don't even know. So anyways, we can see prices identifying an equilibrium, and that just means price is holding true to the middle of the range. Okay, now where we're going to make money is identifying a breakout on either side, a breakout long up here or a breakout short of the bottom end of the range. Okay, now one cosmic truth about this 5-minute chart is that as soon as price touches or moves below, like let's say price does something like this, we're kind of still moving and we're moving lower and we break low, okay? One thing that will always remain true is that price will eventually, as soon as price ever retouches this line and it enters back into the range, it must go to the other side. Okay, so it must escape the other side. And we could see that through a squeeze play. We could see that through a number of different things. Now, if the opposite were true, and let's think with our range of outcomes, let's say price, we see a reversal here off of this low, and price begins its trek upwards, and it's able to escape this range and begin to feel for the upper bound, okay? Now, if price were to ever re-enter this trading range, again, in a relevant period of time, okay? So right now it is about 18 minutes to close, so we won't see this play out in the current session, but we may see this play out tomorrow or in one of the following sessions. If price were to ever re-enter this range, we would see it move to the other side. And one thing I want you to think with is that the longer that price goes outside of this range, like let's say price moves lower and then it just continues lower and lower and lower and lower. The longer it goes staying outside of this range, as soon as it re-enters, the more velocity it will break through with. So if it's just a very temporary, very minor exit, and then it re-enters the range, it will break through this top end eventually, but not ever with very much velocity. Okay, and the same would obviously be true for the long side. If it broke out long, re-entered the range, very quickly and very, if there was lots of wicking out on either side, meaning if there were kind of these long wicks on candles and the candles weren't very full in their bodies, then, and all this means, let me just amend that. So when you see these wicks, okay, all this is buyers covering their longs, okay? So when we wick out at the top like this and the candle doesn't close near the height of its body, all that is someone who bought down here and he's now covering his long, and then you see this retracement in the body of the candle. So I just wanted to shoot this quick video and kind of break down a little bit of basic geometry in charting. This is supposed to be a very introductory video, and you can get as complex with this as possible. I do this a lot on the higher time frames as well to try and identify macro trends. So when looking at a daily, I find a lot of success with this actually on an hourly or on a 4-hourly chart. This will serve to identify, we're not using this to identify sentiment necessarily. We're using this to identify potential squeeze plays. And when I say a squeeze, again, what I mean is a squeeze through the bottom of the box if we were to ever re-enter short, or a squeeze through the top of the box if we were to ever re-enter long. So sometimes what you'll see is you'll see this and it'll kind of trend lower. It'll break through the bottom of the box, and then we'll get a very nice setup. We'll get a bullish flag, and I'll do another video on what exactly a bullish flag is. But we might get a bullish flag like this, and then this would be obviously the flag, right? And then it would break out higher here. So anyways, I just wanted to make this video. Hopefully you found it somewhat useful. And if there's any other topics you want covered, I would love to do them for you. So thanks for watching.